coming out with the biggest Indian IPO in the last 2 years. And during an exclusive conversation with NDTV Profit, the chairman and managing director Bhavesh Agarwal talked about his aim for the company's path for profit and more. Listen into that.
We aim to build, it's an interesting thing. We're building a sustainability-focused company to build a sustainable environment, and we want to build this company sustainably, which means we want to build a profitable growth story. We're not there yet. If you see our last 2 years of financials, which are in the prospectus, FY23 to 24, revenue went up 90%. EBITDA margins improved from -43% to -19%, a 24-point improvement in just 1 year. This journey, as we continue to improve volumes and hence revenue, our cost doesn't go up. It's in a manufacturing business. So the operating leverage drives better margins. And secondly, the strategy of vertical integration with our cell coming into our products next year. The cell is the costliest part of an EV. So as the cell we start manufacturing in-house in India, save the margins that global suppliers take, save the duties, that will further drive gross margins and hence EBITDA. So this is the roadmap. I can't share numbers today, but soon we'll be publishing our Q1 results, and I hope investors will take a look.
All right, we'll stick with Ola. Puneet joins us with the major standouts with regard to the company, challenges for Ola Electric, and whether profitability can actually be expected and when. Puneet.
Well, thanks for that. So, we've seen that, the IPO opened at a very tepid 76 rupees, the issue price, and then has run up by 20%. We think, this is, of course, one of the major things in this particular IPO has to be that the valuation has come down from roughly 5.5 billion to 4 billion. When you look at the issue price, it has, the last round was happening at 118 rupees per share. It was reduced to 76, and now, we've seen it at a percentage of 20% to come in at 91 rupees. Anchor Book also saw strong participation, and 40% of it was taken by HDFC, SBI as well as Nippon. Now, what we did was just look at the 3 to 4 main things about the company that might be working for them and a few that might not work for them in the future, and how will they tackle them is the main thing. So, going out, is the first pure play EV company to list on the bourses. Now, we've seen Bajaj as well as TVS have capex on the EV as well as the ICE side, which is the petrol and diesel. But one main thing is that this company is purely electric, so all capex will go into that. Their market leadership of roughly around 35% is also very strong, and expect to going further as well. So currently EV penetration is just 5% and is expected to go to 41% by FY28 according to HDFC Securities, and Ola Electric will definitely be one of the beneficiaries. The Gigafactory, what they've addressed is, the current head of the, so, we saw a lot of changes in employment on people in Ola cabs, and that has been something which has been plugged into. So the current, Gigafactory head is of course an industry veteran, Yoon Sung Park, who's a South Korean veteran in the LG space. He headed LG's electronic battery manufacturing space for around 36 years, and he's come to Ola last couple of years. He's the highest paid person as well, employee as well, more than Bhavesh Agarwal as well, and that's been one of the key factors going forward, the Gigafactory. Within the, one important thing is that roughly 80% of the components across the 3 models, S1 Pro as well as, the S1 Air are same. So, that helps build a platform and then launch multiple variants over the top, and that's similar approach to what TVS and Bajaj has taken. But, when we look at what might not work is, of course, something that we spoke about is the valuation. It came at 4 billion, and now, of course, it's gone much 20% higher than that. But going forward, it's a loss-making entity at the end of the day. It's trading at EV to, which had roughly 1,500 crores of losses in FY24, trading at EV to sales of 5 times, which is on par with Bajaj Auto, but Bajaj Auto makes a lot of, roughly 8,000 crores of profits in a year. TVS is cheaper than EV, on the EV to sales metric when compared to Ola, and that's one of the other things. Finally, last 2 things, the EV subsidy has been reduced by 50% under this particular scheme of the new EMPS scheme, and let's see what happens in FAME 3. That'll be one of the key triggers for EV scooters to pick up. And finally, the EV bike segment, which the company is looking to enter. It has not only been the premium segment that has been seen, but the volumes are very dismal, roughly 15,000 units a year, while Ola sold roughly 3 lakh scooters in the last year. So a few risks on valuation and the new segments such as EV bike, which is largely untapped, but certain things might definitely work for them that we could be seeing in the stock price today. Back to you.
Thanks a lot for that, Puneet, breaking that down comprehensively. But, let's delve down deeper, take an independent voice. Astha Jain, Senior Research Analyst, HEM Securities, joins us to talk about exactly that. Astha, first off, before we go to valuations, let me quiz you on the business model itself. Just if you can briefly, in a nutshell, highlight for the benefit of viewers, what is it that Ola Electric is aiming for? And in terms of operational metrics, where do you see it go to, where growth as well as business is concerned?
Hi, good afternoon. So yes, talking about, where it is aiming for and etc. So my first answer is that the company is aiming for the heavy penetration of the EV two-wheeler, and that is currently, which is at around 4 to 5%. So they are aiming to cater that business, because now this is what the management is also expecting, that by FY28, the EV penetration will reach to around 40 to 50%. So what a growth opportunity the company is having right now. Secondly, currently they have a strong market share of more than 30%. If I talk about the latest figures, so it is more than 30%, although it is 50% if I talk about the FY24 figures. So they have a strong market share. Plus the government pushes there, because they have already got the PLI for 2 of their scooters, and that is way back in January 24. And FAME 3 incentive policy is also working in favor of these companies, which everyone is looking a close eye on and keeping a close eye on. So I think some of the things, first of all, strong market share. Secondly, the way the company is going for their platform 3 launches. So that will help the company in reducing the cost also, because this is what the major concern is right now. We have seen the losses in the P&L statement, and that was the concerning factor when everyone was looking after the IPO. But I can say that now, with the launch of their platform 3 generation, I think the company will be able to reduce the cost. Along with that, some of the launches are pending. I think by FY26, their motorbikes will be launching. So I think that will also help the company, and definitely the cell, which is the prime raw material for the company, constituting around 30% of the cost. So they will be going to have some sort of self-independence in that also, or self-reliance in that also. So all these factors put together is inclined towards the fact that company will reach the profitability maybe 2 years down the line. But I think that is what is liking by the market right now. And company is getting the premium on that basis, or trading at the premium on that basis.
So, you've spelled out quite a few things here, Astha. I want to try and focus in on the valuations now. So you're seeing the current valuation being 5 times EV to sales, which is pretty much comparable to a Bajaj Auto, which is far more profitable, of course. And it's, in fact, you're finding TVS cheaper. So within this pack, this entire two-wheeler pack, would you go for a pure play EV like an Ola, or would you rather much go for a Bajaj or a TVS at relatively the same or lower valuations and, of course, generating cash?
Right. So I think everything has their own, functions. So if I talk about the pure EV player, then definitely Ola is the first choice. Now, talking about the other automobile manufacturers also, they are also looking good to us. It's not that we are just giving a heads up for the Ola and not the others. But here, what I am looking after is that although we have just given the valuation metric of price to sales to the Ola IPO, and when it came at the IPO price of around 76, it was at around 6.8 times of price to sales multiple. Now it seems to be little higher, but we have not compared it with the domestic players. We have compared it with the international pure EV players, and where the price to sales multiple is ranging somewhere between 4 to 8. So now if I talk about price to sales multiple of 8, which is at the higher side, right now the price is coming 91 is absolutely quoting that valuation only. So it is already quoting it price to sales multiple of 8 at the 91 rupees price. So now what we are seeing is that we are continuously liking the stock, but for the more upside, we think one should wait for some more time, because already, so much is already discounted in price to sales. So not much further upside is left in the short term, not in the long term, I'm saying in the short term. So yes, it is looking steeply priced at the 8 price to sales multiple, but what to do, because the other global players are also quoting at the same, and India always get the benefit of its demographics, and we have always seen all the Indian companies to enjoy the premium over the global players pure on the basis of the demographics our country is enjoying.
Hi, it's Amina. When we spoke before, when this IPO is opening, we discussed how it was an expensive stock and, one shouldn't look at it from a listing day gain. But of course, liquidity is such that you can't defy that. At what price do you think this becomes attractive for the medium term? At 90 rupees, surely not. What is a good entry level that an investor should look at?
So, Samina, it is a sigh of relief for me because I just stick my neck out and I told all the viewers on your channel that we are expecting 14 to 15% listing gain. And afterwards, we have seen a deep cut in the market. So definitely, in fact, there was a negative sentiment about the listing also. But yes, we have seen by God's grace, the listing is very, very much into the positive zone. So now at this price, definitely it is becoming expensive, but it is getting the scarcity premium also because it is the pure EV player. And today in India, we don't have a pure EV player in the listed space. The other automobile manufacturers, definitely they are also into EV, but not pure EV. So definitely it will always get some premium of that sort. But yes, at the 91 rupees of the price, we are not recommending to buy. We are expecting some sort of fall if it all it comes at around 86 or 85 level, then it is again a decent buy. So anywhere between 82 to 85, I think it is a decent buy for those who have not received the allotment. And our price target initially in the short term is around 97 to 100 rupees. But in the long term, since the results are due, we really need to review the results and then we can always review our targets also. But at current point of time, 97 to 100 rupees is the price target which we are attributing to the stock in the shorter term. But no need to buy at this point of the time. Let the stock fall till the level of 85, then one can make entry into the stock.
Right. Well, it looks expensive, and it is expensive, but the markets are cheering this new entrant on D Street, 20% higher on Ola Electric. Thank you, Asa, for talking to us. We'll take a quick break. We have the last 30 minutes of trade to go before we wrap up this very, very volatile week.